Hello, everyone. Hey, Stefan, how are you?
Hi, Tony. How are you doing?
Good, good. Welcome to the Trade Check Report podcast. Can you tell us a little about you, Stefan?
Okay, well, I have a full-time day job, so I don't trade too much. I do try to check the markets a little bit every day, usually on my breaks or whenever I can fit it in. I do quite a lot of futures,
Oh,
but I also do quite a lot of 0 days to expiration or zero DTE trades. So I try to, pull up my phone a few times a day to do that, but really just spend the minimal amount of time as I can to just still keep me active and engaged in the market and hopefully turn a profit.
that's great. And where do you live?
I'm in Canada, so north of Toronto, about an hour and a half drive north of Toronto. So we
I,
call it cottage country. Very foresty here, so we're having the leaves coming down right now.
I,
I'll have to deal with
I love Canada. My parents sent me for a short time Upper Canada, which is a school in Canada. So I was there for a short time and I was liking it too much. And then my parents sent me back. So I really like Toronto. It's a great, great town. And also, what is your regular job? What do you do?
It's an engineering type job. I won't get into too many of the details,
Sure.
but just physics related, optics related, so bending light, that sort of
So,
thing. Telescopes.
yeah, you're an engineer. You're a pretty smart dude. So that's great. This is going to be a fun episode. I always like talking to smart guys like you, Stefan. So tell me a little about your trading history. How long have you been trading? What do you like to trade, etc.?
Okay, well, I think I first started trading well over 10 years ago.
Okay.
And I found Tasty Trade in 2015. So I really started trading options more and trading options using the Tasty Trade mechanics. So basically 2015 on. So I'm probably 8 years or so into my trading experience, trying to do things the right way
Right.
and trying to be mechanical and trying to follow the rules and that sort of thing. It's always a challenge, of course.
As a good engineer, you like rules, you like methods, you like following a plan, etc. So I think that's great. Those are the basis of a very good trader.
Should be, yeah. You'd think I'd be hitting it out of the park, but it's always a struggle.
Uh, I think you're going to be fine. So tell me, this is the trade check report. Is there a trade that you would like us to take a look at that you've been struggling with?
Okay, yeah, well, bonds has been a big problem this year for me. I do like being long bonds. I think in the long term it'll probably work out, but in sort of the short term, it's been quite a move against me. So if there's one big drag on my account this year, it's been bonds.
You know, Stefan, you know what's very funny? All the good traders trade very similarly. I have a long bond position. You have a long bond position. A lot of my trading friends have long bond positions. And I think that's the mark of a smart trader. Normally, smart traders are contrarians. And of course, you see bonds crashing. TLT went from 180 to, $85. So of course, you're going to be attracted to that immediately, right?
I tend to be a contrarian trader, so if I can get in at a better price, that's sort of the strategy I try to use, as well as using options to boost my probabilities.
Excellent. So tell me, you can trade bonds with many, many underlyings. You can use TLT, you can use different types of bond futures, etc. What is the underlying that you chose to trade your bonds?
Well, I am a futures trader. I tend to like using futures for the capital efficiency, like even 100 shares of TLT for the amount of bang for your buck is kind of not worth it for me in my size account. I'm in an account that's under $100,000 US.
Okay.
So, if I had unlimited capital, I could put on tons of TLT. But in my case, I choose to do ZB /ZB, which is just the long bond or the 30-year treasury bond futures.
Right.
So, for those that are not familiar with how bonds work, it's just inverse to interest rates. So, when the 30-year interest rate goes up, the 30-year bond goes down. And when the 30-year interest rate goes down, the 30-year bond goes up. So, it's just inverse.
That's a great point because, we've all heard that interest rates are going up, they're going through the moon. And the effect on bonds is actually bonds are going to go down, not up. You're right. So that's a great point that you make. So if you are okay with it, let's go to the board. And you see, I already have a bond trade on. Let me clear that up for you. And
Okay.
can you see my screen, Stefan?
Yeah, I can.
Excellent. So here we are. I've loaded the ZB. That's the bond futures, that's the big boy. And I would like to take this opportunity before we look at your trade to give the guys a little bit of a teaching moment. So as you know, the bond future trades in 30 seconds. I'm sure you know that, right? And bond options trade in 64ths. And that confuses people a little bit, right?
Right.
When you started trading bonds, did you just buy the future, sell the future, or have you always done the derivatives?
Yeah, that's a good question. I would say before I've been trading the yield curve. So usually a yield curve steepener. I've been doing that for more than 10 years. So actually I understood the yield curve a lot sooner than I ever understood options and selling calls and puts. So actually I used to do a pairs trade where I would go, I think it was short the 30-year bond, long the 10-year bond.
Right.
So I was hoping that the yield curve would steepen. So I wanted the interest rates, the farther dated interest rates, to go higher than the shorter term interest rates. But I was doing this 10 years ago before the yield curve was inverted. Wow. So actually now is a much better time to get into that trade where you want the yield curve to steepen because we are inverted right now.
Wow. Stefan, playing the steepener on the yield curve, that's not a basic trade. You must be an advanced trader. I agree with you. Right now, it's one of the best times ever to put on the steepener because frontier yields are very high, and I think they're going to come down in the future. We all think that, right? The problem is, when will they come in?
Yeah, this is like the longest period ever in my lifetime that we've been inverted like this. So yeah, that's another trade I have on is the yield curve steepener. But I trade that smaller because we have micros for those yield curve products.
And it's the first time that we've had 3 years in a row of the bonds losing money. So bonds have been in a huge, huge bull market for the last 10, 12 years. And the last 3 years have been negative on bonds. So that's another thing that has never happened again. And that's why it's pulling a lot of traders in. It's sucking us in. But for 3 years, they have gone down. So it's been a painful trade for the contrarians.
Yeah, I definitely had some pain in the yield curve steepener in the last couple of years, but thankfully it was a small trade. So I do expect that to recover eventually. That's another one of my problems with my trading is I sort of have a conviction or a bias, and I do expect it'll work out eventually. But the question is, can you hold it in the short term to reach that potential profit in the long term?
Yeah. The most successful traders are the traders that are contrarians like you and me. But when a trend goes against you for even 2, 3 months, forget it. Now it's been 3 years. It can be very, very painful. So I don't know what the problem you have right now, but I'm guessing the trend is not your friend right now, right? So let's take a look at your trade and see if we can figure out something to make it better.
Okay.
So we're here. You're seeing the trading screen right now.
Yep.
What trade do you have on right now, Stefan?
Right now, I'm in the 41 days to expiration. This is a trade I put on
November 24, 41 days. Yep.
I put this on several months ago or much earlier in the year, and I've rolled it several times already, but now my short put is in the money. So I'm at the 117 strike. So I'm like 4 or 5 points of money.
The cool thing, do you see the brownish area? That's the expected move for the bonds for this expiration period. So the expected move is from 108 to almost 118. And the one that you have is the 117?
Yeah. So I'm short the 117 put.
You're short 117. And of course, this is a very, very bullish trade. When did you originally put this trade on?
Oh, I would say I rolled it at least 4 or 5 times. So at least 4 or 5 months ago. So I got in, one of my other problems with my losing trades is I get in too early. I mean, it's really hard to time these things. But, hopefully with the options premium, you can kind of buffer that a bit. And even if you're wrong in the short term, you can sort of sell premium against your position or collect premium against your position to eventually get back to even. And that's been my philosophy and my strategy all through my trading in the last few years. So yeah, I got in too early. I probably started off at the 120 put, and I was able to roll. On every roll, I try to go down 1 strike if I can for a tiny credit or for even. I generally don't like to roll for a debit because now that's adding to a loser.
Right. All those things that you're mentioning, those are very advanced things. So, normally when you have a problem with a put or a call, in order to keep the dream alive, we roll it. Sometimes what you have done very smartly, you have rolled it down and out, which means bring it down as much as possible and collect a credit, right? That's been done. So once again, how many times have you rolled this, Stefan?
I would say I rolled it 4 times. Let's say four.
Wow, 4 times. Do you remember how much money you collected the first time?
Yeah, that's a good question. One of the problems we have here in Canada is we don't have a really good way of tracking our trades through our platform.
Right.
So we're still patiently awaiting for Tasty Trade, of course, to come to Canada. So I don't have a really good way of tracking that. I could go back through all my trades and check that. I don't know exactly. I would say I probably would have put this trade on for at least a half a point credit. So half a point on a bond product is $500.
It's $500. Okay.
Yeah.
So half a point is $500. And for everybody listening at home, half a point would be 32 ticks, right? Because options go to 64. Wow. And well, I actually use an Excel sheet myself where I write down all my trades. And, it's very important that this is another probably teaching opportunity. It's very important to write down your trades so you can see how much money you've collected. So every time you've rolled it, do you know if you have collected a little bit more? Just to have an estimate.
I would say I probably rolled for even almost every time. So usually I try to get just enough to cover the commissions of the roll at the very least. And in this case, since it moved against me, I probably was not trying to aim for a real substantial credit on the roll. I was probably trying to roll down one strike for even, or maybe to the same strike for a tiny credit. So I would say I probably collected not much on the credit.
Okay. So let's say you've collected $500. You've been able to successfully roll it down from 120 to 117, which is 3 points. So it's the equivalent of $3,000 of savings that you've had, right? Maybe you've not collected more money, but you have improved your strike price from 120 to 117, which is amazing, right? You took it from here to here, which is great. And right now, the theoretical value of this put is around 501, right? So this put right now is about $5,000. So that means you're probably down like $4,500. Is that correct?
Probably, yeah.
Okay.
It's painful, but this is what we do.
It is painful, but hey, you follow, basic trading rules, tasty trade commandments. You know what happens when, let's say you collected $500. 2x $500 is $1,000 plus the 500. So this trade, you should have probably taken your pain at $1,500, right? Right now we're at $4,500. So you don't. Hey, Stefan, I'm not criticizing you. I've done worse, much worse than you. But sometimes when we are 2x our initial credit, sometimes it's a good time to either question our trade or take it off. Right?
Yeah. I've always considered that. That's probably one of my faults as a trader is I hate to lock in a loss. So my strategy usually is, or maybe my downfall is, I roll forever. Actually, maybe the title for this video could be Rolling Forever is Dangerous or something like that.
You can roll forever, but okay. So first, let's establish where we are right now. So you sold a 120 put. You were able to successfully roll it down to the 117 without spending any money. You did it for a credit, which is amazing. I applaud you for that. And now let's see if we can improve ourselves. So we have a problem here. We have a $4,500 credit, right?
Mm-hmm.
Immediately when we hit the 2x, so when this put that you sold would have been, let's say, $1.32, 132 would be 1.5 for everybody playing at home. When this put would have been $1,500, the first thing we should have done, I know it's easy to be the Monday morning quarterback, right? But you should have done is probably sell a call, sell something against it, to reduce the pain.
Yeah.
Which you didn't do. And let me ask you, why didn't you sell the call when it went against you?
It's a good question. Of course, it occurred to me. Of course, I thought of doing that. I didn't do it. I guess my downfall with those types of decisions is I hate getting double whammied, right? Like, so if I want to be bullish something and I sell the call and then the call gets breached after I sold the call and then my put ends up being okay, but I end up losing money on the trade because there was a spike up. So I was right, but at the wrong time. And then I hate getting killed or run over because I was right, but then I sold the other side and get double. We call it getting double whammied. It has happened to me in currencies before. For example, the Aussie dollar, Japanese yen. I've had strangles, which then I rolled into straddles, even when inverted, and then I ended up getting double whammied. So as the currencies came down, then they bounced back up quickly.
Yep.
Too quick for me to react to it, and I ended up getting hurt on the call side. So I guess that's just from past experience. I hate selling the call when I really want to be bullish on something.
Yep.
But yeah, you're right. I would have done much better.
Let's take a look what Stefan is saying. So Stefan did not sell the call like I'm doing right here, right now. And the reason you didn't do it is if we look at the P&L chart, you wanted to be bullish, right? If you sell the call, now you're afraid that bonds go the way you originally intended and you would lose money on the upside, right? So that's the reason we didn't do it. And that's normal. But remember, this trend has been going on for 3 years already. And we have to protect ourselves. And I understand you don't want to lose both ways, but we let it go a little bit too far. So one of the mistakes that I'm seeing here, Stefan, is you let it get too big too fast. Let me ask you another question. Normally, I like to have my trades be between 1.5% to 2%. If this account is $100,000, this trade right now is taking up, I don't know, $5,000 of buying power, right?
The buying power is a little less because it is futures, which is great, which is why I like to use futures. But the loss, yeah. If I was to realize this loss, this would be a 5% of my account gone.
Right. So we let it go from, it started correctly, and it has grown to maybe double or 2.5 times the size that we should use to trade. So that's one of the things, that has me a little bit worried is the size. It's still manageable. It's only 5%. It could be worse. I've seen worse. I've seen worse in my account, so I'm not faulting you. But so it went a little bit too much. Let me ask you something else. When we have a very strong trend like bonds going down, we all want to catch the bottom, and we want to catch the bottom by selling a put. Did you ever consider doing like a 1-2-0 trade instead of doing just a naked put?
Yeah, that's a great idea. I guess I hadn't really considered that for bonds, but yeah, I could have protected myself even more to the downside if I had bought a put debit spread built into the short naked put to make a 1-1-1 or whatever. Yeah, that would have definitely helped.
Let me show, of course, you understand what I'm saying. Let me show it graphically for everyone. So let's say, for example, we would buy one time the 111, and maybe let's see if we can get a credit by selling two of the 108s. So this is the trade. We would buy one time 111, sell two of the 108s. The way it looks, it's something like this. And then if we're wrong, at least we would collect, from 111 to 108, we would collect those $3, which is $3,000, and sends our break even down to 105. And then, of course, we would be left with our naked put at 105. When there's a very strong down move or up move, one of my rules is never sell naked calls. And I stopped selling naked calls a couple of years ago. And but we're traders, we always want to go against the grain. So instead of selling maybe the put or selling the call naked, just in case we're wrong, why not start the trade instead of starting it with a naked put, start it with something like this, right? And if you're wrong, at least you collect the vertical side from the 111 to the 108, and then you're left with your original put, right? So maybe that's something to consider for the future. I know this doesn't help us right now, right?
Yeah, it's a good point. Yeah, going forward, so a put ratio, in the past we've called something similar to this, we'd call it a 1-1-1 put trade or a 1-1-1. But this is basically the same thing. Buying a put, selling two puts further out of the money is a put ratio. Yeah, it makes sense because now you can earn a little bit as the price is going down. Now you do, I believe, have to wait pretty close to expiration to realize a bit of a profit there, depending on volatility can influence it as well. Okay, but yeah, that's a good point.
Not necessarily, but yes. So let's go back to your trade, the 117, and unfortunately we're here at 501, and we have to figure out what to do, right? This is why you're
Yeah.
calling in. Hey, Tony, help me. So,
Yeah.
okay. Of course, I'm not going to say we're going to cry, but one thing we could do is cry, which we're not going to do. And the first thing I would do, you started at 120, right? Let's look
Yep.
at 2 or 3 scenarios how to improve your trade. One way that we could do is we could box out the trade. What do I mean box it out? So we could sell the 113 call, buy the 117 call, and let's take a look. What does that create? So by boxing in the trade, it still leaves you no risk to the upside, right?
Mm-hmm.
But unfortunately, it would guarantee a loss of $1,500. I don't know if you can see it here because the maximum P&L would be $2,500, and we're down right now about $4,000, right? So we would be guaranteeing a loss of $1,500. That's one way to protect ourselves. But the positive here is it gives you a little bit of protection to the downside. So in case we keep going down, you at least collect something. Okay. So that's one possibility. Unfortunately, since it went against us so hard, it's not a great choice. Another choice is selling the call which you don't want to sell,
Mm-hmm.
right? So the 120 call is the theoretical price right now is 28 ticks. So if
Yep.
you sell the 120 call, you collect a little bit, right?
Mm-hmm.
Not bad, maybe $800. And that reduces your cost basis because the key for you to get out of this trade, Stefan, is we have to keep selling something against it until you're
Yes.
right? The second way you get out of it is by a miracle and bonds rally and you get out of it and nothing happens. But we cannot live on hopium. Hopium is a drug that affects every trader, you know, and I don't want you to live on hopium. Let's try to do a few things and then you choose whatever fits your style, right?
Okay.
So this is something I would do. 120 is a little bit far, right? It's a little bit far away, and you collect something, at least something against it. It's not bad. And let
Yeah.
me take a look at your 117 put has an extrinsic value, I'm guessing, of $1, right? Right now. And
Yep.
here we would collect not a full dollar, but it would collect 28 out of 32. So almost $1. So that's another possibility. One cool thing I like about Tasty Trade is we can move the call that I want to sell, which would be my third adjustment. So the first adjustment was boxing in your 117 put, guaranteeing a loss. Second adjustment would be selling the 120 call. And here we would risk what you were afraid of, getting double whammied, right?
Yeah.
But look at this. You will be safe. You will not lose any more money until the 125. So, I still don't mind it. And if we look here at the P&L, for a $4,000 profit, it could go up to about 122 and would still be okay.
Yeah.
You see? It's
Yep.
it's not bad. A more aggressive adjustment, which is what we should have done in the first place. I know it's easy looking back, but another adjustment, which will be much more riskier, this would be our third adjustment. The cool thing about Tasty, we can move it down to the 117 and it would increase the tent because our extrinsic value would be, increased tremendously. And here we would have a chance to collect the $4,000 both ways. If it goes down to, let me see, to the 115,
Mm-hmm.
and all the way to the 119. So if it stays between 114 and 119, we'll still be okay. And of course, you would get double whammy, on the upside and also on the downside by doing this adjustment, which you already are, right? So
Right.
this is the adjustment so people can see on the trade page, moving the call very aggressive to the 117. Of
Mm-hmm.
course, we collect a lot more money, but your fear would be exacerbated because it brings the upside more into play.
Mm-hmm.
Another adjustment that we could do, and I'm going to leave my favorite one at the end, okay, is we sell the 117 and then we buy something on the top, something cheap, something like the 122, right? So this would be like a Jade Lizard type of adjustment to leave you something like this. You would get double whammy, but not that much. And if the bonds rally like crazy, you get hurt, but not, it doesn't destroy your account, right? And it still gives you a chance to make money.
Mm-hmm.
So,
Okay.
in fact, let's take a look at the chart. Even though I'm not a chartist, I don't pretend to be a technical analyst. But let's see here, Stefan, we see a nice, I would say, resistant level of 119. Even if the bonds rally hard, I think it'll spend a little bit of time here, in my point of view. And then we have a second one around here, around 122. So even if they rally, I think 119 to 122, it's not going to be easy just to push past those strikes that fast. You know, those are some price levels that could help us. I'm glad that you called right now, because if you would have called around October 6th, you would have been in a much bigger house of pain, right, than right now.
Yeah, I guess I built up a tough stomach over the years to sort of withstand moves against me like this. But man, look at that chart. Like, that's kind of an unheard of move. To lose 10 points in a month or so, we've never really seen that, as far as I know, not in my trading career. So like, that's what we call like an extreme outlier move. So I guess part of the lesson is here, we have to prepare for the times when we do have an extreme outlier move.
Definitely, definitely. This move is absolutely ludicrous, crazy. But if you have the wrong trade on, we either have to stop ourselves out at 2x, our credit received, if we're really wrong, or make a quick adjustment. At 2x, either have to take it out or do the trade that you don't want to do, which is sell a call against it. And you can sell the call, aggressive call, or not an as aggressive call. Maybe sell it where you started at the 120, like we saw.
That makes sense.
Right? So this...
Only wish I did that a month ago, that's all.
Well, you see, you should have called in the show a month ago. No, I'm joking. So here, let's see. I'm going to put something out to you, which is going to be a little scary, right? So when I have a losing put, let me just talk to you without the screen. When I have a losing put, the best way to protect a losing put is by adding more risk. And I know it sounds scary, but I'm not saying that bonds have bottomed, but it seems like they have stabilized to the downside. So adding more risk could protect the put that you have right now. And let's go to the screen and check it out. I know it sounds scary. So everybody knows that at the money is where we get the most bang for our buck, right? So the bonds, ZBs are trading at 112. So I would sell the 112 put. And please don't get scared, okay? So we're going to sell the 112 put, which has a theoretical value right now of about, in fact, I'm going to take out your trade right now, just for everybody can see. So this is what I'm doing. And then I'm going to look for an upside put, which is half of the price. So this is $2. So let's look at something that's 4 here. I would buy this one and sell 2 of these guys. So this would be another 120 trade right now.
Yep.
And it's adding a second layer. I'm going to add your put in right now here. And this is what it would look like. So what I'm doing is I'm adding more risk, but I want to protect your put right now. And this would give us protection down to around the 110. Because these 4 points, if we stay here, you would collect those $4. And it would almost bring you down to like a break even, right? But we're adding another put and we're increasing let's take a look how much money we're adding. So I think we're doubling right now the buying power effect that you have, right? If we do this trade.
Yeah. At least, yeah.
At least doubling, because we're going to have 3 naked puts and we're going to have 1 long. So we're going to have 2 nakeds instead of 1. So that is another way to protect yourself. Now, if that's too aggressive, right, what I would do is move this thing out to the expected move. Even the computer doesn't expect it to go down to 108.
Yep.
Right? And then we're collecting 59. So I think I'm going to just delete your trade right now just to see if we get a credit. And let me see. Here we get a small credit. So this would be another adjustment that I would do. And what is the goal of this adjustment? If we keep going down, I don't want you to keep getting hurt. You see, this adjustment will give us at least from 112 to 109 some breathing room. And the best time to put this adjustment on, Stefan, would be on a down move. Recently, we've gone up a little bit, right? If we see the chart, and here's the chart. So we bounced from the 108 was scary. Oh my God. So
Yeah.
right? 108 really took you to the really house of pain. And, the trading gods have taken us from 108 to 112, which is not bad. But the best time to put in this protection would be on a down move. Maybe when we were at 108, that would have been a perfect time to put this trade on to protect ourselves. Unfortunately, once you let a trade go to 5x, right, or 9x, you collected $500. Now you have almost $5,000 of losses. So that 10x. Now, the way to get back to break even is not as easy and as comfortable. We need a little bit of luck, and we have to take some risks. And what I'm offering you is there's 2 types. We have to reduce our cost basis. We can reduce our cost basis by selling some calls, or we can reduce our cost basis by adding more risk and selling a put spread. You have a great video. I've seen it, the 111, which is a little modified from my 441 trade that I originally did. And I hope my 441 inspired you to do the 111.
It did, yep.
So the 111 or the 120 to the downside, unfortunately, we're going to add more risk, but it's going to help get you to break even faster. Or you have to sell the call or sell a call spread. I wish I could have a better answer for you, but I don't, because there's no free lunch. There's one last one that I just thought about. Let's see if you like it. And then we'll recap what we did. So the other idea here would be, here we are. Let me get rid of this leg. The other idea is to sell this one. We're collecting $1. And then let's go to the 122 and let's buy 2 of those, Stefan. Because you expressed to me that you were afraid to get double whammied, right?
Yep.
So this is another way to collect a little bit of money and hopefully not get double whammied. And if you want to collect more money, we can go a little bit further down, let's say even to here. Let's see how much we can go without having red. That looks nice to me. So this way, we'll let your put go up, and then we don't get double whammied.
Interesting. I'd never thought of this one. Okay, interesting.
So I'm trying to convert your brain, which is a brain of an engineer, a brain of a super smart guy, and trying to offer you different solutions. Your fear is to get double whammied. This trade will help you not get double whammied to the upside, right? If we do the 111 or the 120 to the downside, you will get double whammied, but on the same direction, right?
Yes. Yes, that's right.
So,
oh, by the way, I love how you can flip back and forth between the curve mode and the table mode here. I love that. We don't have that in Canada. We desperately need this Tasty Trade to come to Canada so we can do this. So
supposedly, Tasty Trade has been ready for Canada for a long time.
Yeah.
It's coming. But, you can always open a U.S. corporation and open an account. Who knows, right?
Yeah, I mean, that's a good topic for another video. I haven't done that myself, but we have fellow trader acquaintances and friends who have done that from Canada.
We can ask my wife to adopt you and grant you U.S. citizenship. I don't know.
Okay, so, well, Tony, just to recap, so why don't I tell you back what you told me
Yeah.
as a recap to see if I got everything right. So we've got basically 6 options of what I could do now. My naked put has gone way against me.
Yeah, let me delete them and we can recap them little by little. Yep.
So you gave me 6 options. So my naked put's in the money. Obviously, I should have sold the call earlier. I didn't, but what can we do now? So your number 1 idea was box it off on the call side.
Yep, which is box it off is selling the 113 and buying this one. And this is the way it would look. And unfortunately, this box will guarantee a $1,500 loss. But at least if we go down, you will collect the width from 113 to 117. So that's the positive, right?
Okay. And then number 2 was strangle it off by selling an out of the money call, which is what I should have done.
We could sell the 120 and make it look something like this, right?
Yep.
Or we could move him down more aggressively to the 117 and make it look something like this. Excellent. Here we are. This is how it
so that strangle it off. I would call this number 3 straddle it off.
This is the strangle at the 120.
Yeah.
Yep. And the straddle would be 117.
Yeah. So that was option 3.
And once you reach the 2x, you either have to straddle it or take the loss.
Yeah. Good point. Okay.
Yep.
Yeah. I like those so far. And then option number 4 was Jade Lizard it off.
Yep.
So sell an out of the money call or an at the money call and then buy a further out of the money call to make it a Jade Lizard.
Yep.
Yep. Okay. And then number 5 was take a Xanax and sell another put and take on even more risk.
Yep.
Which can be a little scary. I understand the concept. So yes, buying another put and selling 2 out of the money puts for an additional naked put, which is quite a bit more risk, actually double the risk.
Double the risk. But if we go down to 108, you will not lose any more money than you have already lost. You would only lose more money if we go past 108.
Yeah. I would say if I had a much bigger account, I would consider this one. In my size account, I don't think I could be adding more risk to this.
Yeah. Just to be truthful, this is the adjustment I would have made myself.
Yeah. Okay. Fair.
Yes.
Okay. And number 6 was straddle it off.
Yep.
And then buy 2 extra calls out of the money.
Yep.
Which this was mind blowing to me because I'd never even thought of this. I'd never even seen anyone mention this before.
Well, that's why you have me.
I love that curve mode. Yeah, I need this curve mode in Canada. Okay, so yeah, very interesting. I like that. I would say if you were to ask me which one of these am I going to try?
Yeah.
I would say just for simplicity and my own comfort of what I'm used to doing, I would probably strangle it off. I should have done that already. So why not just sell an out of the money call? I could straddle it off, sell at the money call. The reason why I don't like to use straddles that often is because they move quickly. In a harsh move, either way, up or down, the P&L of that position is going to be bouncing around very strongly. With an out of the money call, it's not quite moving as quickly.
Yeah, let's talk about it. So here's the straddle, and let's take a look at it. So we're 112. Even if it rallies to 125, still not that bad, right?
I like that. That's my top choice right now.
I think so. And Stefan, I cannot give you advice what to do because I don't want to get sued. Please don't sue me. But what I like, you've rolled it from 120 to 117. You already saved yourself $3,000, by doing that. And if you're worried about the upside, you can be a little more conservative. You can go to the 121 and make it look something like this. What I want, bonds are going to rally sooner or later, right? And we don't want to get double whammied, which I understand. But you still have to keep selling something against it to keep reducing your cost basis.
Right.
Yeah, that's
a great idea.
That's unfortunately, I wish I would have seen this trade a little bit before when you were 2x loser. Or you can do the upside ratio. Sell the 170 and buy 2 of the upsides, and what the hell?
Interesting. I'll think more about that one as well.
Thank you, Stefan. Thank you very much.
Well, thank you, Uncle Tony.
To the show. And I hope at least, I love brainstorming with smart guys like you because we talked through the trade and we found a lot of alternatives to help us get out of this mess, right? But there's only two things that are going to get us out of this mess: reduce cost basis little by little, or we get a huge bond rally, right?
Right.
We don't want to keep losing money. We've lost enough money right now. Your 117 put has $1 left of extrinsic right now. So you still have a dollar cushion, right?
Yeah.
So if you have that dollar of extrinsic and then we can collect, 3/4 of a point or something, that's $1.75 that can help you in the future when we rally.
Mm-hmm.
If you want to, I would wait for an upside day to sell that call. Don't sell it on a down day.
Yeah, well, thankfully, this last week we did have a bit of a jump up in bonds,
Yep.
which was nice. We've been waiting for a while for that after so many down days.
Yep. So maybe take advantage of this. I actually sold TLT calls against my TLT zebras and naked puts that I have last week. When we have one contract, it's hard to underhedge, but I was able to sell 30% of the calls against my puts. So I like underhedging. When we only have one contract, it's hard to underhedge because there's only one, right?
Yeah.
So if you have two puts, then I would be comfortable selling one call.
Mm-hmm. Okay. Yeah, great ideas. Thanks so much for this discussion.
Excellent.
I learned something.
And, one of the best ways to create wealth is to monetize your financial IQ. And I can see you have a very, very high financial IQ. And trading is one of the most incredible ways to monetize your financial IQ. And I have no doubt that you're going to grow your family's wealth by using your intellect and using your financial IQ to create wealth.
Okay, well, thanks, Uncle Tony. Yeah, actually, that I totally forgot to mention, I've got a YouTube channel as well, just like you. Mine's called Canadian Options Trader. So I've been actually trying to gear that a bit more towards Canadians. And that was my original strategy. And we'll see where that takes me. I do love doing these sorts of things and talking about trading and interacting with other people and following the markets. So yeah, hopefully that goes somewhere. We'll see how that goes.
Can you tell me again the name of your channel so I can put it up on the screen?
Yeah, just Canadian Options Trader.
So everyone, this is Stefan's channel. Check him out. I'm sure you have great content. I'm going to check it out myself because I really enjoy talking to you today. And I'm sure I'm going to learn. Everybody can teach you something, right? So I want to thank you for being on the show. And remember, you got to risk it to get the biscuit, Stefan. Okay, everyone. Now that Stefan has left the building, our Canadian options trader, let's do the report card. We have to grade him. So, number one, the use of probabilities. Here it's hard. The initial trade that Stefan placed, it was completely a 10 out of 10. Textbook sold put against a downside move. The problem, my crystal ball is broken, and Stefan's crystal ball probably was broken too. And unfortunately, bonds kept going down and down hard. So his initial use of probabilities was correct. His current probabilities are no bueno. They're pretty bad. So I would give his use of probabilities on the opening trade a 10 out of 10. The current status of his probabilities, it's only maybe a 4 out of 10. Now, trade management. Here is what I think Stefan could have done a little bit better. Tasty trade rules, or the best traders in the world would probably take out. He sold his put originally for $500. So when that put would have been worth $1,500, I would have either closed it out and taking $1,000 loss because it's $500 that I collected and then $1,000 loss. That's 2x times my credit. Or I would taking an aggressive adjustment of selling a call when we've reached that 2x. So trade management, I would give him a 2 out of 10. I'm sorry, Stefan. When you see this, please, my apologies. Size, similar to probabilities. When Stefan put this trade on, it was 9 out of 10. 10 out of 10, excellent. It was taking 1 to 2% of his account. And because it went against him from a $500 credit to $4,000 credit, now it's a 5% of his account. So now it's a big boy. It's a big size. And that's why Stefan couldn't do my 120 adjustment or my 111 because it's already too big. So by letting it go too far, it took away the opportunity to do a downside adjustment. So size originally would have been 9 out of 10. Right now, it's a 5 out of 10. Duration, Stefan, he's doing everything perfectly, 45 to 60 days. And one thing Stefan has done amazingly well is roll down and out. Everybody has to learn how to do that when you sell naked puts or uncovered puts. He's keeping the dream alive, moving the strikes down, and always for a credit. Even if you only get a $1 credit, Stefan did that immaculate. So instead of having a $4,000 loss, Stefan could have had $6,000, $7,000, $8,000 loss if he wouldn't have done that. His put would have been stuck at the 120 and it's down to the 117. So that's something Stefan did remarkably well. So overall, Stefan as a trader, he's a very, very good trader. I can tell immediately he only let this trade go too far because he's smart. He's thinking bonds cannot go down that far. So I would give Stefan overall a 7 out of 10 because he did some things really, really well, like move the put down and out. And he did something very, very bad, which he let a bad trade become too big and didn't want to adjust it. So remember, the best way to grow your wealth is increasing your financial IQ. And there's nothing better to monetize your financial IQ by learning how to trade. And if you want to grow your pile, increase your financial IQs, follow Uncle Tony, and remember, you gotta risk it to get the biscuit, baby.